Yo guys, welcome back to the channel. In today's video I'm going to go over the trades that we took throughout the week, and then just pretty much some tips when trading the system. And every Saturday I kind of like to just run through the system, how I trade it, and what you want to be looking for every week, just so it kind of gets nailed in your head a bit more on how this works. So this week market was open on Tuesday. Monday it was closed. So this is where we're at pretty much. The market was bullish. Why? Because this 30-minute time frame on the 30-minute chart for the calls is crossed, and these are for Friday contracts. So the Friday contracts tell you the main trend in the market, and to get these contracts, it's very simple. You find where SPY opens on Mondays usually, but since market was closed Monday, we use Tuesday's open. But every week it'll be using Monday's opening price. So SPY opened at like 600, let's say. Then you round to the nearest fifth dollar, so that rounds to 500. Or not 500, my bad, 600, and then you add 5 to get the calls, so 605 calls, and then subtract 5 to get the puts, 595 puts. This week the puts were pretty much irrelevant just because the calls were crossed, and since they're crossed on the call side, obviously the puts aren't going to really have any important information on that chart, since they'll probably be destroyed pretty much. So that's how you get the contracts. You round to the nearest fifth dollar, and then for the 0-day chart, you round to the nearest dollar, add and subtract 1 to get the calls and puts. So hopefully you know how to round, because that's pretty much how you get the contracts. It's very simple. You don't just pick a random contract to watch. It's a certain way to do it, so that's how you do it. So we were bullish this whole week, so the focus was on the long side. So when we are trending, in this case the calls, on the call side, that means we're bullish. We want to be looking for setups that are in that direction. So what setups would that be? Well, 0 DT crossing calls is probably your best setup there could be, just because we're in a trending market, and then if we get that cross intraday, that pretty much flips the intraday trend to bullish. So you'd want to look for a 0 DT call across, and then after that you look for a 50 dip on the 0-day chart. So if we just go to like a 0-day chart real quick, this is what that would look like. Actually, I think I have a bunch of screenshots I could show you guys, but this is one of the trades we took throughout the week, 21st. Like I said, 0 DT cross is the trade you want to be taking in a bullish market, or just when we're trending. 0 DT cross in the direction of the 30-minute trend. So we got that 10 went above the 50 here on the 602 calls, and we took an entry somewhere in this area when we got the cross, and the 50 has to be flat or curling up. So that's very important when taking a cross. It's more than just the 10 SMA crossing the 50 SMA. The 50 SMA has to be flat or curling up, preferably curling up when you take the trade. If it's sloped down like how it was back here, there is no entry point. So I'll probably have an example of what that looks like in one of these screenshots maybe, but that 50 has to be flat or curling up, or the cross is not valid. You have to wait for the 50 to flatten or curl up to enter a trade. If you don't wait for it, then most likely you're going to get cooked 9 times out of 10, just because a lot of times it'll just slam right back down, and we'll probably lose the 50 or something like that. So that's why it's very important to know exactly how to trade these crosses, because it's more than just the cross of the SMAs. The 50's pretty much the key factor in whether you enter or not. So that paid nicely. What was that, Monday or Tuesday, I believe. Obviously this is what the 30-minute chart looked like at the time. So since we were crossed on the 30-minute, 50's trending up, that means we're in a trending market, and that's why that 0-day cross worked out nicely. Here's an example of what the 50 looks like down. So in this initial cross right in here on this bottom left side of the chart, 10 went above the 50, but the 50 is trending down super hard. So this cross right here means nothing really at the moment. So since the 50 sloped down, we are not in a trending market yet. This is a 30-minute chart, so that 10 has to be above the 50, but the 50 has to be curling up or flat for us to be considered bullish. So at this initial cross, the market was still neutral because that 50 was not sloped up. We finally got the curl somewhere back in this area. As you can see, 10 starts sloping up, and that's when the trend flips. And you can see how well respected that 50 was. We held it the entire way. See what else we got here. So this is where it kind of gets a little bit, not complicated, but this trade doesn't happen that often. So this is an overbought trade. I went over this, I think, in one of the last videos. After we do have trend for a while, eventually the 0-day chart is going to get overbought, and pretty much when we hit overbought, it usually doesn't go much higher past overbought before we see a pretty good reversal. So the only time you look at like overbought is when we're like when the 30 minutes trending for a little bit. It's always good to know what we look like on the 30-minute chart after we are in a trend, just so you know if we are getting overbought or not. So to get this overbought zone, what you do is go to the 30-minute time frame on the 0-day chart. That's the only time you are not on the 5-minute on the 0-day chart. And what you do is find where the 50 SMA is on the 30-minute, and then multiply it by 4 and multiply it by 5 to get the levels. So at the time of this screenshot, I believe, actually, this was the right? I don't think this was the right chart at first. Maybe I had the wrong chart, or no, I think this was the right chart. So you multiply by 4, multiply by 5 to get the 2 levels, and that's your overbought zone. And when you do that, though, you will change the levels until we reach that zone. So because that 50 SMA is going to change as time goes on. So every time that 50 changes, you change your overbought levels until price hits one of the zones. So once price hits one of those zones, you stop like changing the levels and just leave it there, and that's your overbought zone. So when we get into the zone, we would expect a pullback. I don't think we got anything too significant on this. I remember I did take a trade on this and got 40 points, but then I ended up stopping out on the remainder of it, or no, not yeah, I did stop out the remainder of it at break even, just because I was in the trade a while and the trend was super strong, and we weren't getting that big of a reversal yet. So I decided to cut that at even. I know we ended up like trending up a little bit higher, and then we ended up reversing more in the day. I'm pretty sure I had the screenshot of that, but here's another trade that we took. So like I said, you want to be taking trades in the direction of the trend. So since the market is bullish, these 605 puts were pretty much crossing at open, and this is not a trade you want to take. What you do in this scenario is wait for the negative cross. So 10 is going back below the 50, and I ended up going long right here at this 50. This is a perfect entry point because that 50 is sloped down really hard. The market's trending bullish, so trading in the direction of the trend is a really good thing to do, and that's what we were looking for, and we got the entry right up in here. And unfortunately, I didn't hold this all the way, so I ended up stopping even right before it reversed. So it pretty much stopped me right at break even before this reversed, which was very unfortunate. There was nothing on the chart that said to get out. It was just solely off the fact that NQ was a little bit weaker, and I was just limiting my risk. And obviously that came back to hurt me because this marked the bottom of the day. As you can see, that negative cross printed if you held that. Yeah, unfortunately, I didn't get much out of that because I sold that pretty early. And then, on the Friday contracts, what you want to be looking for after we get trend is the higher time frames to see where we could possibly reject from. And the 4-hour 50 is a big deal. 4-hour 50, daily 50 are major spots of resistance. So going into the end of the week, we kept on like hitting the 4-hour 50, so it was a weird spot kind of for the market to be in. Like at that 4-hour 50, you would expect some sort of pullback, and I forget what day this was. The 22nd, we hit overbought. We ended up hitting overbought again, I believe, up in this area. Or is this the same contract? No, these are 605 calls. Nope, my bad, that's the wrong chart. These are 606 calls. Not sure why I have those on there, but anywho, same thing goes with the overbought levels. We came up in this area. I tried getting a short position. I think this was the same day. I think I just had the wrong contract. We came up in the zone. We got that little bit of a 40-point drop, and then price went up a little bit higher, and then we did end up nuking later on in the day. It was just hard to catch. That's just how it will be sometimes with the overbought zones. Sometimes it stalls a bit before we get a solid drop, and it could be hard to catch it. So in that case, like with the overbought trades, it's best just go lighter and just scale in until we hit that upper edge of the zone, and then your final ad will be up in that upper edge or upper layer of the zone, and then just wait from there. Or you could buy option contracts and give yourself some time, maybe like a week out, because more times than not we'll get that drop. It may just take a little bit longer. So it's kind of how you can play the overbought zones. Again, like what was it, the 24th? Was that the Friday? Yeah, it was Friday, yesterday. We came up in that 4-hour 50 again, and we ended up rejecting it pretty hard in the close on Friday. We got a solid dump in the afternoon, and that was because that 4-hour 50. So, like I said, it was a weird spot to be in because since we picked new contracts on Fridays, these other new contracts were right at the 4-hour 50, and then earlier in the week we were at the 4-hour 50. So it was just a weird spot to be in. We kept hitting major resistance, and we finally, saw some downside off of it. So that is why we did get the drop and why we didn't move higher, because of that massive 4-hour resistance. And then on Friday, I tried taking a long, just didn't work out right here. Bought this 50 dip. Why did we buy that 50 dip? Because the market's turning bullish, and when we are trading bullish, you buy the dips on the 5-minute chart until it doesn't work. So we came down here to the 50, and we ended up taking a small loss. I mean, it wasn't many points. I think it was like 3 points on ES, so we can't really complain with that. It was a small loss. And then when this chart went negative, I mean, that's not a trade you want to take because we are turning bullish. Then on Friday, we did get a put cross, but I stayed away from it because we were right at the 30-minute 50. We were at the 30-minute 50 on the Friday contracts when the puts crossed yesterday. So down in this area right here, and I don't know why my chart keeps doing this, but when we got the cross on puts, you know, it was kind of a weird trade to take. I could see why you may have wanted to take it, but at the same time, I just stayed out just because of this chart right here. 30 minutes at major support. Puts were crossing, so I just stayed out of that like cross because that's typically not a trade you want to take. But you know, there was kind of like an argument because we did hit the 4-hour 50 that would, you know, provide a decent move, and it did. I just prefer to stay out of it since we are at major support on the call side. So, you know, if you want to take that cross, okay, you know, maybe, you know, just go lighter risk on it, keep a tighter stop, just because the market is still bullish and there's a chance that this 30-minute 50 holds and the puts go negative and we rip from there. So, you know, that was pretty much what we did throughout the week, and you know, the reasons why we took the trades and how to take them and how to pick the contracts and everything like that. So I'm gonna keep this style of video on Saturdays just to give you guys like a review of the week, review of how to, you know, read the charts and pick the contracts and things like that, and you know, the trades you want to be taking. Because again, I say this all the time to some people that, you know, aren't the best with like exactly how to trade the system. So like, you know, you want to be like, you want to know the trades that are the most, you know, probable, most like conviction you'll have in them is when, you know, again, market trading bullish, a 0-day cross in the direction of the trend and a 50 dip on those charts is gonna be your best setup. When we're neutral, it's just a 0 DT cross either side. So, you know, you don't want to be taking, like in a bullish market, you don't want to be taking a negative cross on puts. It just doesn't make sense. The trend's bullish. Why would you take a negative cross on calls when you know the trend is in the favor of the bulls? And a lot of times when those charts go negative on the 0-day chart, they'll come right back up and cross, and we'll get like end up ripping. So you're better off just sitting out of the market when we do cross negative and just wait for us to cross again. If we don't get a cross again, okay, cool. You just got to know how to sit out of the market when that does happen. Same thing with on Friday, like when the 0-day chart on puts were crossing, I just sat out. Why? Because I know the trend's bullish. We're at major support. Like, I'd rather just sit out of the market than take a risk on playing that cross. Like, Friday's a little different than a typical day when we're at the 30-minute 50, just because we did reject that 4-hour time frame, which obviously could provide a big move to the downside. So again, Friday's a little different than the usual day, just because of that 4-hour, you know, resistance. But on a typical day when we're at the 30-minute 50, like down in here, right down in this 30-minute 50, if puts were crossing, I would not be taking that because we know the trend's bullish. Why would we be taking the put cross? Just wait for the chart to go negative, and that will give us, like, that's our high conviction setup, because we want to be taking trades in the direction of the 30-minute trend. So hopefully you guys understand that. It's very important to know when you're trading the system. Also, you don't need to be on the charts all day, every day, staring, trying to force like 100 trades. You take like I take like 1 to 2 trades a day at max, and I feel like that's the best way to go about it with the system. Just make your money, get out of the market, repeat the process every single day, and that's how, you know, you'll do well. So yeah, I share all the trades in the private Discord down below. Me and Colton run it up, so if you want to follow along every day, that's where we're at. Yeah, it's $70 a month. Might seem expensive, but it really isn't for the value in there. I mean, with one trade, you'll make it back. You know, depending on what you trade, I mean, you could probably make the whole lifetime, or not lifetime, whole year's worth of the subscription in a trade. So yeah, that's pretty much all I got. If you guys enjoyed, drop a sub. Join the Corey if you want to learn. I'm out. Peace.